Hi everybody, this is Steve Rising with Thin Slice Trading at the ForexTradingInstitute.com. This is another quick short video to kind of carry over from yesterday's video on planning a trade for EURJPY, just to kind of cover the conditions that developed from yesterday's video to today's video. I encourage you, if you didn't watch yesterday's video, please do so, or watch it again and then couple it with this video to kind of tie the information together. So at any rate, here we are on the daily chart again. As discussed yesterday, EURJPY is in range-bound conditions or sideways conditions. The majority of that activity trading between 103 and 104. Talked about planning a trade, looking for potential reversal activity at the top or the bottom of the range. Also briefly talked about when a top or bottom of range is cleared, it's what we call momentum as opposed to any type of trend-based activity. And the reason for that label is because momentum equates to a short, quick burst of price in one direction, which is very typical in the Forex market. In fact, I think one of the single biggest elements that a Forex trader needs to learn immediately at the beginning of their Forex trading career is to understand that trend following techniques are not very applicable in the Forex because it is predominantly range bound. That when we do get a move, the moves are very short lived, and the most predominant characteristic is that price is changing direction all of the time. In other words, in one 1 to 3 hour window it can be moving north, then it goes flat for a few hours, reverses, and then moves in the other direction. That's a very typical characteristic of the Forex. The Forex does not trade like the stock market or, say for instance, a future in the commodities market, where it's to everyone's benefit involved for a price to move in one direction for an extended period of time. The Forex has central bank intervention, which creates destabilization in the pairs. It really is the perfect market to trade on an intraday basis. And as soon as you come to terms with the fact that it is consistently range bound and that price does change direction frequently, it becomes easier to trade, and it's an extremely profitable and simple market to trade because of these repetitive characteristics. So we can see here, as of this is our current session or today's activity, we did breach that top of range briefly. As I mentioned yesterday, we knew that the next area for price to stop or stall is what we call our next significant number, which is 104.50, and we didn't quite make it there, but certainly the next area that we could also plan for reversal activity. Another quick point too, it becomes easier and easier to identify where you want trading setups to develop as you stay focused in on these particular conditions from one day to the next. In other words, we know that when price cleared 104, which was our top, we would look for a quick short burst of price moving north. The next area it's going to stall is in front of that 104.50 number, which is that just that recent top that I touched on in yesterday's recording. Once again, if you did not watch yesterday's recording, or even if you did, I encourage you to watch it and then watch this recording back to back. So a couple of points here. We know that the next place we can look for momentum is at 104.50. We also know that we can look for reversal activity at 104.50. We can trade on either side of 104 back down to 103, our bottom of range. And that's another distinguishing characteristic of a Forex trader, is understanding that typically in the course of a trading day or during a trading session, the solid, consistent Forex trader will have a plan in place for price to move north or for price to move south based on these tops and bottoms of ranges, or in this case where 104 is now potentially becoming a middle of what is now a larger range. The key here is, once again, is to understand that trend following techniques don't work well. The problem is, a lot of times, is folks try to trade a trend following technique on a smaller time frame, but trend following techniques do not work well trading on smaller time frames or in volatile markets or markets that change directions frequently. That's just the bottom line. You know the old saying, using the right tool for the right condition or the correct tool for the job, and in this case using a trend following technique in these consistent range bound conditions just doesn't work in the Forex market, and that's why there's such a high failure rate in the Forex. Remember, everyone makes money trading. What separates most folks is that ability to hang on to those profits. So we can see here now our start of day here, moving to the 10-minute chart, which is really the perfect time frame to trade on the Forex market. And there's other videos that I've posted that discuss selection of time frame. We can see here, here's our move that cleared 104 right here at this point, and then the majority of that move here moved from 104 just slightly north and then stalled out in this area here. So another thing to understand is the average size of a price move is typically around 30 pips. That's why scalping the Forex market makes sense, is we want to take a piece of that move. Old saying in trading is you'll never know where the top or the bottom is till after the fact. So the idea of trying to take a price move all the way to the top or the bottom is another reason why many folks struggle. What we want to do is just take a section of the move. So we can see the move stalled out. It stalled out right here. We got a little bit of retracement. There was a little further extension of the move at this point, but as we can see here, price stalled out in front of our 104.50 number and then reversed. We actually had, as far as our FX analysis that I host every Monday through Thursday from 8:30 to 9:30, the focus for our traders was to look for this move right here at 104, a form of breakout here. Our entry strategy indicating that move developing right here at this point. And that's another critical aspect of trading, is you need to have a very precise entry strategy. In other words, it's not just about selecting direction and then pulling the trigger and hoping things work out, because these moves are very short-lived. As I touched on yesterday, we actually know what minute we want to enter on after our entry strategy develops, and that's one of the proprietary aspects of the thin slice methodology. So at any rate, price moved down, average size move once again, just about 30 pips before we had price stall out right here. Little extension of the move, excuse me, wrong arrow, a little extension of the move here where we cleared what's known as our speed bump to the south side of our 104 number, and then we bottomed out, and here again price reversed. So we're reconfirming that top at this point, so we know that now looking for another short setup in this area at 104 makes sense. But once again, here we are in these range-bound conditions, and we can see that initially just evaluating the overall price action, which is what a trader needs to do, is understand price action, is we can see price move north here at this point, then it reversed and we started to move south, and then it moved north again. So we've got this constant shift in the directional bias, which not only creates false signals if you're heavily reliant on indicators, but also creates a lot of problems if you were looking for, as price created a high here and another high and was topping out at that 104.50 number, that area that I mentioned on the daily chart, you're looking for price to continue to move north when in fact it reverses and moves the other direction. So once again, it's important to understand that when we look at becoming consistent traders, once again everybody makes money trading. The question is can you pay yourself at the end of each month, or do you give those hard-earned profits back to the market immediately? Is we need to first and foremost have an understanding of price action as it relates to the market that we trade in. We really need to be specialists in trading FX because the currency pairs do trade differently than, as I mentioned, other entities and other markets. And it's also important to understand that once again, the two predominant conditions is sideways activity and that price changes direction. So the tools and techniques that we need to consistently make profit need to encompass those factors of the market. Certainly, we can attempt to try to use other tools and techniques that were designed to trade in other markets or when price is moving in one direction for an extended period of time, but that's also going to affect, obviously, our profit taking and our ability to consistently make profits. So thanks for your time. Once again, Steve Rising here with Thin Slice Trading at the Forex Trading Institute. Please take some time to review that part one of this section here on planning a trade, EURJPY. Thank you for your time and have a great day.